Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hey Lauren.
Hey everybody.
Hey Lauren, our last episode, which I highly advise our clients to take a peek at, which is actually pretty entertaining. We studied some of the older initial years of the tax system, tax returns that we found on a historical website. And one of the ones we picked was 1936, the income tax returns for people that had to file for tax returns that year. And it's interesting because we also found this letter from the I think it was the Secretary of Treasury.
Yes, the Secretary of the Treasury.
He wrote a letter to the President in 1936, who would be Roosevelt.
Right.
And he had some very interesting comments about how he felt the wealthy were evading the tax system.
Yes, and I have somewhat of a dark sense of humor sometimes, but some parts of this letter I really thought were funny. And I don't know necessarily that I'm going to be able to communicate why it was humorous to me, but a lot of the stuff that the Secretary of the Treasury here is just in depression. I mean, he
was very dark, in a dark place.
Yeah, he was really unhappy because basically he just couldn't get people to pay their proper taxes, and he was really unhappy. Basically, he was really unhappy about very wealthy people not paying their taxes. It wasn't so much everybody else. And
Speaking of that, before you do that,
right.
And this is some of the motivation for some of these tax ideas. The people that were very wealthy, they were paying a surtax of up to 79%
right.
of their income.
Yes.
So that's a high tax bracket. Okay.
Yeah, and what was funny to me is that so many of the things that he talks about, we still deal with these same problems today. And this is what he said. Although Mr. Justice Holmes said, taxes are what we pay for a civilized society, too many citizens want the civilization at a discount. We are eliminating, one by one, devices for tax avoidance and evasion and loopholes in the law. But each one eliminated seems to cause an increased use of the remaining schemes. And when I read this, I just had to laugh. I said, it's always this way.
Right.
Anytime you're dealing with any sort of problem that you have, if you're trying to eliminate one by one the particular methods that people use of that particular problem, well, of course they just use whatever whatever's remaining, even more. So I guess what I'm saying is part of why I thought that was funny is that this whole letter came off to me in some ways as being really kind of naive.
Right.
I mean, just a little bit like, well, yeah, of course they're doing that. I mean, what did you expect? But here's one of
the examples.
Yeah, one of my favorite examples, and this is partly because I never really liked Wall Street very much in the first place, and you'll recognize these two names here. But he was complaining that people were basically attempting to split their income up among trusts and among family members to make it seem like they really weren't making any money because they wanted to avoid that surcharge.
Right.
I mean, they were eventually reporting their income, but they were trying to pretend that all sorts of different trusts and estates and corporations were making this income when these things didn't even really exist. But he said, so for instance, Mr. Charles E. Merrill and Mr. Edwin C. Lynch of Merrill, Lynch and Company, 40 Wall Street, New York. So he put their names and their addresses because he had been specifically auditing these returns. They have 40 trust funds as well as 23 personal holding corporations.
Okay.
So, and of course none of these things existed before the new tax laws went into effect. So these new tax laws went into effect and all of a sudden, Mr. Charles E. Merrill and Edwin C. Lynch felt the need to start 23 different companies to do, what? No one is really sure. And when I was reading this, I was thinking about, because I've just been studying to pass the enrolled agents exam, how a lot of the stuff in the tax code seems so ridiculously complicated.
Right.
And when I would study it, there would be times, when I would literally get angry. I would just
because of the complexity.
Yeah, because of the complexity. And they think, what purpose could this possibly serve? But then I realize, read this, and I'm like, oh, now I understand how I have to learn about the tax code in order to really understand it. I have to start from the perspective of somebody who's trying to avoid taxes. And then I have to think from the perspective of, how do I stop this person from avoiding taxes? Unfortunately, I think we do too much of this trying to eliminate loopholes one by one.
Right.
And I think that that attempt has not really worked as well as it could have, for the same reason that it didn't work way back when. And then, of course, the one other thing, I know that there's something near to the end that you want to look at there, but the other thing that I noticed is that, and you brought this up when we were talking about this, the biggest problem they had then was oil companies avoiding taxes by using depletion and some of this other stuff. Well, of course, same problem. We have the same problems today, and I think that it's it's really useful to understand the history of the tax code. And when I read this, especially given a lot of debates about taxes, sometimes I realize that I wish more people understood this history,
right.
because we're just on a technical level. We're fighting the same battles. We've got the same problems.
Right.
We haven't learned, I think, what we could have learned from history.
Right. Well, yeah, and the fact is, this is 1936, so only roughly about 23 years after the code was invented, the very first return.
Right.
And the two takeaways I want to take is that he was disheartened by the investigations that lawyers of high standing at the bar are advising their clients to utilize devious tax avoidance devices.
Right.
And the attorneys are actively using them themselves. And
right.
then, they were already talking about, New York law firms have formed in the Panama, Bahamas, and
right. Yeah, all these overseas.
Yeah.
And
this is the takeaway from today, and this is what's happening. Is the very last on the very last line to the paragraph, he says the audits of 1936 are just beginning.
Oh, right. Yeah. Yeah.
We tend to find some of these more of these things, but the thing is that I don't believe that the takeaway I want to take is this talk about raising rates. I think the wealthy will absorb so much of that, but at a certain point, if the rates go back to something like this ever happens, you'll see that more and more tax avoidance and strategies and that. So. And
at the very end of it, what he talks about is the vast majority of people pay all their taxes.
Right.
And I think that that's something else that hasn't changed. I
Right.
I think the vast majority of people are paying their taxes.
Right. I think that from a global perspective, the U.S. taxpayers are probably as ethical or more than most other countries
exactly.
in voluntary disclosure. So.
Right.
All right. Well, thanks, Lauren. That was very interesting studying history, and we'll see you next time on Erickson TV. Bye now.
See you next time.